Welcome back to the channel and welcome back to another price action review. So you guys are probably getting the gist now in terms of how important these price action reviews are, especially the weekly. Daily ones are important as well, absolutely important, and you should be reviewing price action each day. But the weekly ones, as I said before, give you the opportunity to step back, look at the market and identify areas where you could have improved, looking at different patterns, signatures, structures, frameworks in the market that potentially can offer an enhancement to your edge, or ultimately create a new model, or improve your understanding of market flow. So I often make the point of how important the weekly price action review, price action journaling is, and it's something that is a stable on this channel. I continue to do them now. Admittedly, I'd have liked to have got this out for you yesterday, recorded this yesterday, but unfortunately it was not possible, so we're going to do it now. But at the end of the day, the process still remains the same, and I urge each and every one of you who tune into my channel to ensure that on a Saturday you take the time, you schedule out an hour, no more than 2 hours. I wouldn't have thought it would be necessary, but again, it depends on how many assets you trade and so on. But to take the time out, really put the effort and time required into producing a good piece of work. All of these things matter. Intentionality is key, so just make sure that is the focus when you get into this session. So we're going to commence. As always, just want to ask if you get any, if you've got any benefit from the weekly price action journals, if you wouldn't mind just giving the video a thumbs up. Also, why not subscribe to the channel? Be more content coming. Obviously, we've got the backtesting playlist, which is continuing, and obviously the weekly price action journals and the dailies will be coming, and at some point in time, not too long in the distant future, live streams hopefully will commence. But for the time being, we're focusing on the weekly price action journal, so if you wouldn't mind just hitting the subscribe button, I would greatly appreciate that. So with all of that being said, let's get into this. Now, I don't envisage we'll be here too long, but hopefully there are things that you guys can take away in terms of how I view the market, look at the market, and in terms of what the market ultimately delivered. So we have the daily chart here, and I've annotated the key elements that were applicable to me as price evolved during the week. Just bear with me a second. Okay, so if we know this week started here, and we also know from the economic calendar, US Thanksgiving was Thursday. So the real key element of the week was Monday, Tuesday, Wednesday. Certainly for me anyway, although Friday would have potentially have delivered something, but that's neither here or there. So following last week's price action, so we've got so last week being here, following last week's price action, so I had noted how the market had traded down into this internal range liquidity in the form of the BISI. Now, in form of the BISI, and ultimately it found support here, rejected from CE, and ultimately repriced higher. Now, I'd made reference to the fact that we were in between two imbalances, the CIBI and the BISI, and to essentially see high probability price action, we needed to see one of them violated. And in this case, it immediately violated the CIBI daily. So that confirmed institutional order flow had resumed to the upside as far as I'm concerned. There was a cracking correlation down here, hence the the purple, pink, shaded box. So once that had been violated, it was safe to assume, if we start looking at external range liquidity to internal range liquidity protocols, that we were in fact potentially in an internal range liquidity to external range liquidity delivery. Okay, so in order to confirm higher prices, as far as I was concerned, I would need to see some form of high time frame cracking correlation at the lows to support the idea of higher prices. Okay, so that would be important. I'm just going to take a quick drink. So if we look at Monday's price action here, so Monday we see how the market gapped up, right? Left this liquidity void, volume imbalance in here. So with a gap up, that could support the fact that the market is looking to attack these highs quickly and seek this external range liquidity pool. So seeing that supported by institutional order flow being bullish, the draw on liquidity was clearly this high. Now again, the market does not need to get there, but certainly if we have that intention in mind, we have an idea in terms of how we're going to structure and formulate our game plan for the entire week and per day of what we are looking to do. Now that does not mean we won't sell the market given an opportunity. That doesn't mean that. But we know that to remain on side, the market is bullish. So again, as I said, for me personally, with this week having a US bank holiday on Thursday, it meant that the focus for me was Tuesday, Wednesday for a high probability trade idea. Because I don't want to be in the market. We obviously know Thursday would be a scrub, and then Friday could present anything. And to be honest, I wasn't looking to do anything on Friday. So key takeaway here, as I said, is the fact that we traded into this large BISI. We've rejected bodies of the candles, did not violate CE. Okay. Market showing intention to trade higher, violated the SIBI, premium pedia rate, violated, closed above. Key signatures here indicating potential higher prices. The market starts to expand higher. We have this new week where we open, so we've obviously got this new week opening gap, market gaps up, an indication that we could well be seeing the market want to expand higher to this external range liquidity pool. So we're going to drop down to the 4 hour. A bit more going on here. So let me just get a better picture. Okay. So as detailed on the daily time frame, we saw how the market closed above this SIBI down here. Okay, and then obviously we see this gap up to start the week. But naturally, we have the idea of higher prices now because we've seen the violation of premium PD arrays. So heading into Tuesday, so we start here. Okay. The market ultimately confirmed, heading into Tuesday. Heading into Wednesday, Wednesday. The market confirmed, heading into Tuesday. Apologies. No, heading into Tuesday, down here. The market confirmed the higher time frame cracking correlation at the lows, supporting the idea of higher prices. So we saw this rejection here happened essentially Asia. And the market began to, reprice higher. And as we can see through Tuesday, we see this expansion higher, and the market ultimately purges the previous day's high. So we head into Wednesday, where we now note this SMT at the high with NQ, with the market also and importantly above the true week open. So that supports the idea of high probability near-term shorts as far as I'm concerned. That might be different for everybody else, but for me, that's high probability. Just having a drink. Okay. Then we see the market displace lower down into the volume imbalance, where we see the market set the low of the day. And also, if we take, well, let's have a look. Why not? If we look from here, SMT to SMT, purge low, purge high, range, the market trades back down into a discount. Okay? So that would, in theory, support high probability longs. So the market then forms this high time frame SMT at the lows, again with NQ below the true week open. So supporting high probability longs. However, if we look at the time of when this occurs, it's during the New York AM session, but ultimately heading into Thursday, we know that this is going to be low volume price action. Now, admittedly, the market consolidated during Thursday, which is what we anticipated, trending higher in support of the high time frame crack and correlation at the lows. Market ultimately trending higher. But as we head into Friday, we've got this high time frame framework at the low, most recent. We see this high time frame framework here where the market trades down into, so we've got here this BISI and we've got another BISI here. Market trades down, but look at the bodies of the candles here, the upper BISI, respecting it. Now, admittedly, if you're focusing on the lower time frame, you're not going to be able to see the respect of the BISI. But what we see here is as the formulation of these candles transpire, the market trades down into the lower. So you could take this one out. You could just delete that. That's fine. And then it trades back, and we have SMT at these lows here at this old low H4. Supporting the idea of higher prices, then we see this expansion towards the end, at the end of the week, purging previous day's high of Q3, and then into the high time frame drawn liquidity to close the week. So a lot in a short period of time happening within the market, but ultimately delivering to our high time frame drawn liquidity, which is key. But how we would have been able to have traded in opposing directions with high probability setups during the week. Now, for full transparency, I didn't take a trade in the end this week, and there was a reason for that, and the reason being was that the setup that formed here was outside the parameters of my model. However, because it was a model that I don't typically use that often, there are elements of that model which were not, let's just say, extremely clear and rules based. So one of my mottos is, we don't lose, we learn. Okay? If we don't win, God, I forgot what my bleeding motto is now. How ridiculous. Let's make sure we get it right. Let's get it right. We either win or we learn. That's what it is. I don't know what I was going on about. But anyway, so this provided an opportunity, as far as I'm concerned, to learn. because because where I had a moment of hesitation, that instinctively informed me that my model wasn't clear. That is where your hesitation is coming from. If your model is not clear, that's why you are hesitating. And that's what it taught me. And it was a model that I don't use that often, but it was glaring in the end that, damn, there is a missing element here, per se, that I needed to address. So I took that element, went away, evaluated it, grabbed data, and then we made the necessary adjustments where needed. But that would have supported this trade idea lower. And it's one of those things, but we keep moving forward. But not to dwell on that. I didn't trade Friday, as I mentioned, but a setup would have formed in here, which we'll go into in a bit. So ultimately, as I said, the market showcased signs and signatures that it wanted to reprice higher, and ultimately within this period here was a clear indication with the high time frame framework on side that the market was going to reach into this high time frame drawn liquidity. So let's take a slightly deeper look into the hourly. Let's get ourselves, I think that would do. Looks pretty good to me. Okay. So let's have a look at things. So as we embark on the hourly, we can see on Monday how the market essentially opened and consolidated. We set the London low, but ultimately the market was consolidating around the true day open. Then we see the market reprice higher, came back to retest here, and then ultimately reprices higher to set the high of the day, which ultimately became the previous day's high. Before then, we see this aggressive move lower. So literally, this is literally a seek and destroy type day. Market displaces lower, sets the low of the day before repricing back into the daily range, and ultimately closing at the true day open. So, indecision candle, you could say. So we head into Tuesday. So here the market opens, trades higher, sets the London high, and then we see the market reprice lower back into this busy hourly and sets the London low. Excuse me. And if we see here at the BISI, when we set this London low, again, the bodies of the candles are telling the story. Not even, if we think CE's here, not closing below CE, supporting the idea of higher prices. So the market now displaces higher, purges London high, Asia range, ultimately continuing higher. Now we're into the New York AM session, continues higher into the PM session, purges the previous day's high, and closes bullish on the day. All right. So not a lot that went on, and again, if you're a trend trader and stuff like that, opportunities were there. But let's not forget the SMT that formed at the low here. That indicated and supported the idea of a continuation move, and I did forget to mention that, so apologies in terms of Tuesday. We saw that the confirmation of the high time frame crack and correlation at the lows here during the Asia session. Market reprices higher but doesn't violate any H4 liquidity pool, and ultimately trades down into this BISI. There was no setup for me there. but ultimately the market continues higher. So during London, displaces higher. New York trades back into here, so let's just mark that up. Okay. So then during the New York AM session, the market trades down. Again, look at the bodies of the candles. Telling the story, respecting the BISI, indicating higher prices, and the market ultimately trades higher, purges the previous day's high, and sets the New York PM session high. So then we head into Wednesday, which was probably the key day of the week. So pre-true day open, pre-confirmation of true day open here. The market purges, so we see this consolidation, then we purge that BSL New York PM session H1 liquidity pool above the previous day's high. So we form SMT at the highs with NQ. So that's a high probability Kraken correlation, a high probability divergence between ES and NQ. I would argue that that is more significant than ES and YM or NQ and YM. So we see this Kraken correlation at the highs. And that sets the stage for lower prices and a potential model at this point in time. We've got the H1 purge, SMT, market trades down. Now, that there is the H1. Actually, let's mark it in for completeness. I'm just going to put it out to here. Okay, so that is the high probability bearish order block, which is formed. Was responsible. This move was responsible for the purge of the H1 liquidity pool and also the second swing point to support SMT. Okay, so then the market displaces lower, as we can see here. Fair value gap in here. There's a small one in there that we have, but ultimately remember that's Asian range. Now we're into New York true day. Market displaces lower, fair value gap, sets the London low, which is key. We then note low time frame SMT here with NQ. That is what sets the framework or sets the stage for higher prices, where I can start to anticipate price potentially trading above the BSL London. Ultimately, that's what I'm looking for, seeking the liquidity above that level. But I am aware that also this SIBI is here and the market may just trade into the SIBI. Now, if you look at NQ, the bodies of the candles and everything were respecting that SIBI. ES overshot it. Okay, but that's fine. So we see the low time frame SMT at the lows, setting the stage for the near term intra-session, if you will, higher prices. Market trades up into the SIBI H1, but fails to purge the London high. So we now form SMT at the highs with YM. And this formed the model and set the stage for continuation of lower prices, which was delivered. But there were certain elements of this which I'm not going to, go into during this conversation, but there were certain elements of this model here that were not documented. And my rule of thumb is, irrespective of whether I have a belief that this is going to deliver. If this is not documented within my rules-based mechanical system, I do not execute on the trade. And that's what happened here. That's what happened here. And it forces me then to go away and evaluate the changes. And if I think that they meet the criterias of my model, they still fall in line with my model, and I can go and evaluate some data, or I've captured data already, but not necessarily acted upon it, and this is just an additional layer of supporting information, then it can meet my model, the criteria of my model, and which is what happened here. So the market displaced lower, purges this SSL H1 down here, ultimately trading down into form the low of the day. But also at the same time, when it forms the low of the day, trading back into the volume imbalance and forming SMT, high time frame SMT at the lows with NQ, setting the stage for now higher prices, whereby the market essentially just retraced back into the range. But with Thursday being a known US bank holiday, this could set the stage for a continuation of higher prices into Friday. That's why that was so key. So as mentioned, the US, this was Thursday was the US bank holiday, Thanksgiving, where ultimately the market opened, trades down into the BISI, then continues higher, where it ultimately forms the next BISI, the higher BISI, should I say. But I think the most important thing is it was reduced trading hours, and the market ultimately is trending higher. It just consolidates, but it's trending higher. And that's really sort of all we can sort of deduce from there. So then we head into Friday, where pre-true day open, the market trades down once into the BISI H4, so the lower one. Well, they kind of all trade down into the lower one, to be fair. During the Asia session here, before repricing higher, or in fact displacing higher, and it sets the London high at the true day open. Then we see the market essentially trade lower into the upper BISI, setting this London low, consolidating, but interestingly, but failed to purge the London high. As you can see, it just fell short. So in essence here, the market is engineering liquidity to be attacked at a later point. The market reprices lower, heading into the session. It purges the SSL London liquidity, but also H1 liquidity. It's an important part for any of my models, or the majority of my models, should I say. Trades down into the lower BISI H4, rejects. Now again, if you're looking at this on the 4-hour time frame, you can see that the bodies of the candles don't even trade into either of the BISIs, but here on the hourly we can see that we're respecting the lower one. Fails to purge this old low H4, and this is where we see SMT with NQ, high probability. Now, some of you will say, and I'm probably not going to get too much into this, but, well, it hasn't traded below the true week open. No, it hasn't. But for me, there are certain models where it doesn't need to trade below the true week open, especially if we're seeing support at a higher time frame imbalance, or we've had a previous SMT in play, setting the stage for the market to potentially trade higher. If that's the case, and we know what the high time frame drawn liquidity is, then we want to see signatures of support from these H4 imbalances, these high time frame imbalances. If we see that, then that is confirmation to a degree this draw is likely to be hit. If these fail, then the market's likely to target these lows. But ultimately, we see this SMT sets the stage for higher prices. The market displaces higher, purges the London high, just here. Continues to displace higher and purges Q3 high of the week, and then continues to the high time frame drawn liquidity to close the week. And that is the full narration for the week. So, yeah, is it scrappy? Is it kind of complicated? Yes, there is an element of I don't want to say complication, but there is an element of detail in how I look at the market or review the market. To me, when I look at this is really straightforward and simple. However, for others, it may look complicated. But again, as you develop screen time, you see the things that you want to see in the markets, things that support your model and so on, things will become very, very, very simple. This for me is a simplistic conception of what the market did this week. There's things going on at key times. Don't worry yourself with times that, for the want of a better term, are meaningless. You want to focus the key times of the day, key times of the week, and that's when, action is likely to occur. So as usual, what you want to do now, once you've narrated, and I've narrated the majority of what we discussed, I'll finish that off following the recording of this, just going over the touch points and actually typing those out so I have a full comprehensive weekly price action review entry. You want to bullet point your key takeaways from the week, things that you learned that you can utilize to enhance your models, things that you've learned that by visual representation of price you may be able to remove from your models and take away any complexity and just increase the simplicity of things. So it's important that these things happen. Hopefully I've been relatively clear in terms of my narration for the market, and hopefully you guys have taken something useful in terms of how I looked on the market and I was looking for certain confluences in the market to support the idea of what my overall narrative was for the week, which ultimately delivered. So I'm going to leave it here. Hopefully you found something useful. Again, if you would be so kind in hitting the like button, and or even subscribing to the channel if you feel that the content is helping you improve. If you have any questions, do feel free to hit them in the comments and I'll try and answer what I can. But I'm going to leave this one here. Again, hopefully it was useful, and hopefully you guys have a good, successful trading week, and I'll catch you next week on the next one.